If you feel poorer in 2025, it's not your imagination, and it's not your fault. I'm going to show you exactly who is responsible for this and how to protect yourself moving forward. For those of you who don't know me, I am Casey Marks. I'm the founder of Crown Haven, Bull Baron, Pinecone, and Annuity Lock. I've spent the last 60,000 hours of my time on this planet helping real families navigate the traps that Wall Street, Washington, and the global financial elite have set for them. I have sat down with the billionaires. I have seen behind the curtain. I know what the incentive structure is. I've walked the trading floors, hosted my own television show, radio show. I've written books. I'm the guy who teaches other advisors how to do this properly. I started down this path because I watched my widowed mother be failed by a system that was designed to profit from her confusion and desperation. My mission has and always will be to speak truth to power, and that is what I'm doing in my upcoming book, Inheritance: Blowing the Lid Off Big Finance. That comes out June 2026. Until then, subscribe, share, follow me at Real Casey A. Marks, because I'm exposing the truth that the ruling class, quite frankly, has spent decades trying to hide from you. Let's talk about the lie that they've been feeding you. This is the lie. You feel poorer because you're not working hard enough. You feel poorer because you're spending too much money on lattes. You feel poorer because you're just bad with money. That's the lie. Here's the truth. You feel poorer because the cost of living in America is rising faster than your income, and that is by design. Look, the system didn't fail accidentally. It was built this way. So how did this all happen? Well, politicians, if you listen to them, they are going to blame inflation cooling, supply chains, global events, corporate greed, your spending habits. Let's talk as adults in the room. What are the real drivers? Prices surged and wages didn't. Just since 2022, the last 3 years saw the fastest cost of living increases in decades. I'm talking since the 70s. Your bills went up, your groceries went up, your housing went up, your insurance went up, your healthcare went up, everything went up. But your income, did that go up? Probably not. Flat, stagnant, or rising, if it did rise, slower than inflation. That's called a pay cut. Worse than that, it's a forced pay cut. How did this happen? The government printed trillions of dollars. You paid for it. And it felt good, just like anything like that feels good at the beginning, but there's always a hangover. The stimulus felt good, but the dilution of your monetary supply doesn't feel so good. More dollars chasing the same goods means your purchasing power evaporates in front of your eyes. And what happened while that was occurring? Companies raised their prices. Notice how companies just kept going? Stock prices just kept going up. I mean, we had a little blip in 2022, but they just kept going up. Why? More money in the system while companies raised their prices. Had they lowered them? Once a corporation raises its prices, they don't come back down ever. Why? They learned that you'll accept it, especially for inelastic goods and services, like healthcare, things you need, things you can't live without. Interest rates skyrocketed during this period of time. They call it monetary policy. What it did to you is it made your debt heavier. Your mortgage, pricier. Your car loan, pricier. Your credit card, absolutely frickin' deadly, man. Business financing, brutal. Thank God we self-fund here. Thank God I'm in the position to be able to cash flow all of my businesses. And that took years of financial discipline to be able to be put in the position to be able to do that. COVID didn't hurt us at all. So many business owners are not lucky in that way. They're taught to take out debt, especially when it's cheap. But when that debt rolls over, man, and now they have to pay a new payment, bottom line, higher rates are a tax on your future. And everyday Americans absorb this shock, while the elite didn't. I know this because I know the elite, man. I go to dinner with these folks. They own all the assets. And if you think you're kind of cool because you own some assets, great. Good for you. I'm glad you own some assets. I really am. God bless you. But they own way more. And what happened to the prices of almost every asset class? They inflated because of the money supply. Most people, working class, salt of the earth people, good people, like my father and his family, the family he came from in Sparta, Wisconsin, all they own are higher expenses. The rich got richer. It's an old story. It's a story as old as time. Not because they outworked you. Look at the wealth disparity that occurred between 2020 and now. Not because they outworked you, but because they owned the system that squeezed you in the first place. It's all connected, folks. I write about this in my tell-all, Inheritance. And everybody kind of knows this, but nobody knows exactly how it works. I'm exposing exactly how it works because it's freaking important. So how does this show up in your daily life? This isn't theoretical. You feel it every day at the grocery store. Your bill is 25 to 40% higher than it was in 2021, and that's permanent. It's not changing. There is no back to normal. Sorry, your rent or mortgage consumes a bigger portion of your income. That's not going back to normal. Sorry, your insurance premiums have exploded. Health, home, auto, the folks that run the commercials for this, all up double digits. Meanwhile, if you had your money in a high yield savings account, earning 4% or 5% if you were lucky, okay, so you compounded at 15% while everything else went up 40%. That's called going backwards. It didn't go as far. Your dollars in the bank are worth less every single month. Now, your advisor didn't call you about this, but the math changed, the paradigm shifted, and the gap widened, and your margin for error evaporated in front of your eyes. One emergency is now a crisis. One setback is now you're going into debt. One bad year is a delayed retirement. Most families that I meet that come into my retail practice during times of crisis, when the financial markets are dropping and they have all of their assets in the market with really high correlation to the broad market itself, so, you know, S&P 500 down 25%, they're down 30% or something like that. They're not struggling because of poor choices they made. They maxed out their 401k, man. They did everything they were supposed to do. They've got an emergency fund. They're struggling because everything got expensive at the same time, and then the market dropped. The real reason you feel poorer is that inflation outpaced your income. The value of your dollars shrank. Interest rates increased your cost of living across the board. Your debt grew, even if you didn't add to your debt. Asset inflation boosted the wealthy predominantly, not you, and your expenses rose as that was happening. This is one that doesn't get talked about enough, and yes, I've got notes in front of me, for those of you wondering. Your taxes quietly increased through bracket creep. Everybody wants to talk about this big, beautiful bill. Well, if you got a raise and it made you feel cool, but you jumped into a higher bracket, you got taxed more while prices were going up. As your take-home pay shrank, retirement got harder, not easier. I'm very proud to say that our clients are not in that position because we have very structured buckets so that this does not impact them. But for most people, the reason I still have our phones are ringing off the hook, new people wanting to talk to Crown Haven, is because shit got hard and people know their future is more expensive. This is not personal failure. That's the other thing. It's not a personal failure. It's structural theft in mass. Most people that I meet, they're not falling behind because they're irresponsible. They're falling behind because the system is predatory. And I don't mean predatory in the sense that they're writing a check out to some guy who's running away with their money. I mean predatory in the sense that savings rates are lower than inflation, asset prices are rising, making you psychologically feel like you're doing a great job right before a bubble burst. I mean predatory in the sense that the Fed controls whether or not markets move up or down. I mean predatory in the sense that quantitative easing or printing of money or any of those mechanisms that the Fed can use is silent erosion of wealth. I mean predatory in a lot of ways that seem innocuous but aren't. So how do you protect yourself from this? This is where families win. If you have income that rises or is protected from volatility, ideally both. And that's what we do with our income flooring here. This is not an advertisement for my firm, by the way. I'm just saying that's how you do it. You build an income floor that is going to keep pace with inflation. And yes, it's possible to do that. Now, in your growth bucket, you don't just hold domestic equities because they're highly correlated to the volatility of the domestic marketplace. So you hold assets that outpace the dilution of the dollar. Either companies with great pricing power, companies that can take advantage of inflation, inelastic companies, or real assets, even better, protected growth mechanisms, alternatives. Your retirement plan has to account for real, not government reported, real inflation. You ever feel in your gut that what the government's reporting on inflation just ain't quite right? It's because it's not. When your grocery prices go up 40% in 3 years, and then the government reports that CPI is at 2.8%, so everybody acts like inflation's 2.8%, that doesn't mean inflation's 2.8%. It means your grocery prices just rose 40% over 3 years. And now, annualized inflation is 2.8% again, so it's gonna keep eroding. So if you plan for 2% inflation, because that's the target, but real inflation, like the 105-year average is creeping up. It's 3.2, 3.2. But if you plan for 2 and then the real average becomes 4, 5, 6, you're gonna lose. Which is why we plan for such high inflation with our client portfolios here. Right now, liquidity, dry powder is more important than ever before. Cash reserves keep you out of debt traps. Cash reserves are buying opportunity like slingshots, where you can pick up an asset that was just trading at 200 that's now trading at $120 because we had a mean reversion. So don't let your emotions run the game. And if your advisor doesn't know how to do this, find a better advisor. If you're doing it yourself, have a written investment policy statement based on logic that you look at when your emotions start getting in the way, because your plan must assume this environment is permanent, because the world you lived in before 2020 is gone, folks. It's gone. It's not coming back. Sorry, I just had an employee wave at me. The 2025 family protection checklist is straight up. Costs rose faster than your income. Inflation is permanent. Get ready for it. Manage for it. Plan for it. Asset owners got richer. Expenses rose while that happened. So folks that own expenses are paying a heck of a lot more. As a result of this, you need inflation protected income. You need assets with pricing power. You need liquidity. You need all 3 of those things. Your plan must assume that today's environment is the new baseline. It's the new normal. And always remember that you're not the problem. The system's the problem. And the solution is structure. You can't fix the system, but you can protect your family from it. If this was helpful, please subscribe, like, share. I've never chased influence on these platforms before. This is too damn important not to say out loud. Stay tuned for more. For everything I can't say or don't have time to say in the 8 or so hours that I'm at the office and have time to put up an iPhone and put on a little mic and record, grab my upcoming book, Inheritance, Blowing the Lid Off Big Finance, because there is a hell of a lot in that book that I am putting down on paper that people aren't going to be so happy about. Because I'm going to be exposing the truth behind not just inflation, but not just purchasing power erosion, not just false narratives, the media, crypto bros, the insurance industry, the securities industry, the banking industry, all of the lies, the half-truths, the lies by omission, you name it, and why everyday Americans can feel squeezed even in a strong economy, how they can have an incomplete plan, even worse, a fragmented plan based on their investable assets. So much. We're gonna expose the truth, folks. So if you want clarity, not a hype man, just somebody who's telling you the truth, you've found the right spot. There's a reason this isn't promoting my companies. It's just me. I'm hoping to share some wisdom.